For decades, we've been spending carbon like it's an inheritance, that it's infinite and that we can use as much as we can, like a big bank account that has millions of dollars that you can use forever. The reality, it's not that. Today, we're learning why every major brand, business, region, and country really are finally balancing the books when it comes to carbon emissions. In the old world, sustainability was a nice to have, a badge, a marketing positioning, but that is changing. It is becoming risk, compliance, and a business that doesn't look at its risk, well, it can't really operate. And we're not just counting to be green. We are counting CO2 and what happens in the atmosphere because, well, the economy has changed and the pressure from governments and banks has really been adapted to how we need to operate today. Why is this happening now? Well, there's three main fundamentals to this. If you have to pay for carbon, well, doing carbon accounting allows you to predict how much you have to spend to pay to neutralize it or to reduce it in your P&L before it actually hits. The other one is regulations. Countries are mandated that large organizations report on the carbon. And it's that simple. If you're part of this mandatory reporting, you have to do it to stay compliant. And the third one is investors. They're seeing carbon as a risk. So BlackRock, PE firms, venture capitalists are asking their portfolio companies to record their carbon so they can make better decisions as investors. And if you don't do that, you might not get the same interest rates or you might not just get the money. But this is what the pros know, or the believers in a sense, that measuring carbon is not just about staying out of jail or a checkbox. It's about an advantage. It's about having a leading edge. While others are lacking behind, you can do better and share why you're better. And not just a better from a sense of saving the planet, but I like to see that measuring carbon is measuring inefficiencies. In a way, carbon equals cost or money lost. So by doing this exercise and being able to be transparent about it and hopefully reducing into the future, you're just becoming a better business. And who doesn't want to have a better business? And of course, you can have the argument that my business is too small or I just have a small office, so I won't be impacted by these banks or regulatory pressures. Unfortunately, you might deal with a bigger business. They might be your clients or your peers, or you might collaborate in certain activities. And if they get impacted, well, you get impacted. Later, you will learn why you impact them and what you do impacts their own balance sheet of carbon. But now it's key to understand that if you're part of a supply chain of a bigger business, or even just try to win contracts in tenders with governments, you'll have to measure it. You might not be included in the big laws, but well, you are included in the global economy. Once you master the basics of carbon accounting, well, you are empowered to make decisions on how you want to proceed moving forward. If you want to invest money in decarbonizing or sharing with your employees what actions they can do to support your business moving forward. But to begin, you can't change what you can't measure. And compliance is easy, but try to remember that the ambition level matters. So if you're ready to start measuring and in a way stop guessing, try to upskill in something that is relevant today and follow along in the next classes. Thank you for watching.